Hi, good afternoon, everyone. Welcome back to the virtual classes. In the last session, we understood the history of Indian banking system. That means how it evolved. In depth, we understood. I hope everybody understood the concept. In today's session, we are going to discuss about the structure of Indian banking system. That means here you can understand the different types of banks we are having in India. So quickly, we will move to the structure of Indian banking system. See, in the different books, you will get different kinds of structure, different kinds of charts. So here I chosen the simple format to make you understand this concept in a simple way. This is a simple chart. Here you can add even more different types of banks. I will explain you in between. So here mainly we have central bank and special bank. Central bank is RBI, Reserve Bank of India, of X Bank in our India, and there are some special banks. So we need to understand these two concepts first, then I will explain you the different types. First we will understand what is special bank. Special bank means these banks created for the special purpose, for some special reason, some particular reason they created some banks. For those banks we call special banks. We will for that. See, developmental banks is an example for that. In that, Agriculture Development Bank. So there is a bank NABARD, National Bank for Agriculture and Rural Development. So this bank particularly specially created for the purpose of giving financial assistance for agriculture and rural development, refinancing for the rural development and agricultural purpose. So the purpose is special. That means they are focusing on one particular sector here. That is why this is called special bank, NABARD. Second, export import development banks. Same Exim Bank, we have export and import development banks. So here again their purpose is very simple. They are focusing on one particular sector. That means they are focusing on one particular area. That's why it is a special bank, Exim Bank. And in the same way, housing development banks like National Housing Bank, Housing Development Financial Corporations. So there are different banks. For these kind of banks, any bank created with the intention for a special purpose, and bank created to focus on any one particular area, for that we call special banks. Hope all of you understood this. Now we have investment banks. Under the same special banks we have developmental banks, and again investment banks and industrial banks also. So that means they are focusing on particular field. See, investment banks, they focus only on investment related. Okay, these banks act as a mediators between the companies and the investors. So example, mutual funds, life insurance companies, there are different examples for that. Industrial banks. So these banks mainly focusing on industrial development and providing financial assistance for industries, companies. Example, IDBI, Industrial Development Bank of India, IFCI, Industrial Financial Corporation of India, ICICI, Industrial Credit and Investment Corporation of India, and we have SIDBI, Small Industrial Development Bank of India. All these different banks, they focus on the development of industries. That means they are focusing on one particular sector, that is industries. So that is why these banks are special in nature. That's why we call special banks. We need to understand other different types of banks. So we all know that Reserve Bank of India, RBI, is the central bank in our India, like a federal bank in the US. So under this Reserve Bank, we have mainly two kinds of banks: scheduled bank, non-scheduled bank. This you need to understand what exactly is scheduled and not non-scheduled. So for this, I give you a small example to understand this. It is very simple. You may be knowing about listed companies. If any company, the name is listed in a stock market, share market list, for that we call listed company. If it is not listed, non-listed company. In the same way, the name of the bank, if it is listed, that means scheduled in a RBI's Act, okay, for that we call scheduled banks. In the next slide, see scheduled banks. Scheduled bank means the name of that bank if it is scheduled in the second schedule of Reserve Bank of India Act 1934. For that we call scheduled bank. That means the name of a bank, it must be listed, it must be there in the second schedule of Reserve Bank of India Act 1934. So for that kind of bank we call scheduled bank, and these can be either in the form of commercial bank or cooperative banks in any form, and they are tightly regulated by the RBI. Of course, because they are tightly regulated, they will also get some benefits. For example, they have rights to borrow money from RBI. They can borrow money from the RBI. So this is scheduled bank. Non-scheduled, exactly opposite. The name of that bank is not listed in the second schedule of the RBI Act 1934. So in a very simple words, you need to understand scheduled, non-scheduled. Scheduled means the name is listed in the second schedule of the Reserve Bank of India Act, RBI Act. Non-scheduled means the name is not listed in the second schedule of the RBI Act 1934. Okay. So if it is listed, that means if it is scheduled, they will get some extra benefits. They can borrow from RBI. If it is non-scheduled, they cannot borrow money from RBI except in some emergency cases. Okay, in an emergency case, they can also borrow. So this is about scheduled and non-scheduled bank. Now, commercial bank, cooperative banks. We will understand just one by one. Commercial banks, you all know, the banks which provides you the facilities for your commercial activities. For that we call commercial banks. So almost all the banks names, whichever you know, almost all the banks are commercial banks. Now, under the commercial banks, again we have mainly four types: private sector banks, public sector banks, foreign banks, regional banks. Now, private sector, public sector, understand this. Private sector means the ownership of the bank is completely with the private people, private sector bank. Public sector means the government had more than 50% stake in any bank, for that we call public sector bank. For example, it applicable for even companies. For any company, their stake, if a government having more than 50%, they purchased more than 50% stake of any company, that become public sector company. That means government will get the control of that company. So like they will become a owners for that company up to some extent. So for that we call public sector. So in a banks also same. So private completely under the private people hand. Public sector, it may be with a private public partnership both, but more than 50% stake is under government. That's why we call it public sector. So foreign banks, regional banks, all these things again I will explain you individually, because I need to explain the functions of these banks, characteristics of these different types of banks. For example, functions of regional rural banks and their characteristics, okay, and their objectives. So I need to explain those things. Again, I will come back individually. Now I will just give you one line explanation for all these types of banks. So foreign banks, these are the banks originated in a foreign countries, and they will set up their branches in India. For that we call foreign banks. Regional rural banks, these are some banks which are specially set up in a rural area, local areas, to develop the rural areas. When it comes to the public sector, again we have different types in that. In the public sector, you have SBI and associate banks. Now there are no associates because you all know that all the associates, 7 associate subsidiary banks merged with SBI. Now we have only one, that is State Bank of India, that is public sector bank. Another one is nationalized bank. So in the last session, I explained nationalized banks. So 1969, 14 banks nationalized, and 1986 other banks nationalized. So those nationalized banks comes in this heading, and there are some other banks. For example, recently RBI in 2016 they introduced payment banks. Okay, there are different types of other banks. What is payments bank? Payment bank means it is on new kind of banking system where they can accept deposits up to 1 lakh, but they cannot lend money. They cannot lend money to anyone. They cannot give loans. They cannot issue even a credit card. So for that kind of banks, we call payment banks. For example, for the payment banks, we have Airtel payment bank, we have uh, Geo payment bank, and we have Indian Post. Indian Post also they started a payment bank, so we have that payment bank, Indian Post payment bank. Then we have Paytm payment bank also. Okay, these are the different types of payment banks. Small banks they started newly. So there are different other kinds. So when it comes to the cooperative bank, before moving to the cooperative banks, I need to clarify one thing here. Many students they will get doubts. So what is the difference between State Bank of India, that means you are telling it is a public sector bank, and nationalized bank? See, the meaning is almost the same. SBI, State Bank of India, it is a public sector we call. Nationalized bank, that is also ownership is held with government. So almost public sector banks, nationalized bank, both are under the control of government. Okay, ownership is under the control of government. But the difference here is nationalized means these banks earlier private banks. Okay, later they're taken over. Later they converted into government companies. So for that we call nationalized banks. But public sector banks they are not nationalized. Okay, earlier itself they are government. For example, State Bank of India. I told you in a yesterday's session. First, East India Company they established some 3 banks: Bank of Bengal, Bank of Madras, okay, and Bank of Bombay. They established 3 banks and they called it Presidency Banks. Later, they merged all the 3 and they created Imperial Bank. And in again in 1855, they changed the name. Just they changed the name of Imperial Bank into State Bank of India. State Bank of India was not nationalized. Okay, that is why we call it public sector. But the 7 subsidiary banks of State Bank of India were nationalized. Okay, only subsidiary banks nationalized, but not the SBI. So all the nationalized subsidiary banks they merged with SBI. That is why now SBI is not a nationalized bank, it is a public sector bank. In India, largest public sector bank SBI, and it is the only oldest existing bank in India, SBI. And along with this, we have even IDBI also, Industrial Development Bank of India, that is also public sector now, so not nationalized. So that is the difference between nationalized and public sector banks. So same ownership is with the government, but there is a small one fine line difference between these two. Now come to the cooperative. In a cooperative, you all know that group of people they join together, they start their own banks for their own mutual benefits. For that kind of banks we call cooperative banks. So now in the cooperative banks we have different types. We have state cooperative, we have a district cooperative, and we have urban cooperative. Here they're given different names: central cooperative, primary agri cooperative. And in all these cooperatives again we have different types. In a state cooperative, for example, scheduled state cooperative, non-scheduled state cooperative. When it comes to the urban, same. When it comes to district cooperative, again it is same. So we have both scheduled, non-scheduled in the cooperative banks. So again I will come back to the upcoming sessions. I will explain you each and every type of bank individually with their objectives, functions, and their main goal. So I will explain you that in the next session. I hope all of you session. Thank you so much. Have a nice day.